So one of the most valuable and important documents when it comes to being a freelance artist, business owner, entrepreneur, accountant, economist, etc., whatever you want to call yourself, is a P&L, otherwise known as a profit and loss. And in today's video, I want to share with you my more simplified version of that, link in the description down below, so then you can start considering pricing, budgeting out, costing, profit and lossing your projects. At the end of the day, you can't be a freelancer if your costs are above the revenue you pull in from a project. And unfortunately, a lot of artists don't know their costs, so then they think they make a lot of money and spend a lot of money on this project to make it happen, and then realize that their bank account is zero. So to make it simpler, I wanted to create a spreadsheet that can help communicate a little bit more information and how time relates to making the work, so that we as artists can make good work and also make a living doing what we love. So with that out of the way, let's take a look at this easy profit and loss spreadsheet that I've been working on, and hopefully you'll find some value out of. When you download this for the first time, you're going to open up the Freelance Personal Finance Estimator. Now, when I'm using these census.gov numbers, they're not intended to be what you should make as an artist. Instead, they're just designed to give us a rough foundation of what project costs should be, so we can get an idea of a target day rate that we want to make and a minimum day rate that we should make to make sure that we can afford food and rent and all the things that we need to live. So before you do any sort of freelance project, it is always wise to get an idea of what your costs are, so then you know if a project comes across your plate, you can actually make some money off of it versus, oh, I have no money at the end of it. So once you know your burn rate and you have a rough idea of what you want your standard day rate to be, anything in between that could be profit. You don't know until you start doing work, and it all just comes back down to time. How much time you spend on the work could either make your day rate higher or lower, especially if you're doing direct client work. So let's say hypothetically we're doing a project at the very beginning of 2024. It's a commercial for a friend, and our start date is January 1st. We just finish up our New Year's party, and he says, hey, we need this project done by the 31st, which is a really good project. It's a full month project, and he says his budget is $5,000. Okay, sure. One of the most important things is that we as artists need to make sure we stay within our client's budget, because no one likes surprise bills. So let's say he comes to us with a $5,000 project, and one of the best things that you can do as an artist, in my opinion, is to think profit first. And I'm taking this concept from one of my favorite books, Profit First by Mike Michalowicz, and it's basically saying we should pay our business before we start taking funds out for creating some of the work. I'm definitely paraphrasing here, but a good profit margin could be somewhere between 5 and 50%, might be more, etc. Now, the way I built this spreadsheet is it's intended to be a little bit modular. Anything that's white, you'll be able to change. I'm not going to lock any of these spreadsheets for when you get it, but when you open it up, some of the gray values, or a lot of the gray values, will have formulas in them. If you don't know Excel, I don't recommend playing with them, but it can give you some information that you might not think about as a starting freelancer. So let's say we have this client where there's a budget of $5,000. We want to make 20% profit, which is a good margin on that. And we estimate that this project is actually going to take us 20 days. This turns yellow. Why is that? Well, the reason why this value turns yellow is because if we look down here at this other data, we can see that target days on project using freelancer day rate. So it's taking our total budget of this project and our profit margin, and it's subtracting this from the total budget. So we have to make sure that we don't spend more than $4,000 on this project, because time is money. As a freelancer, we want to make our day rate, which is the blue value. That means that we should set this to 12. And when it's 12, hey, look, that means that we are staying within a profitable number. So then what this basically says is, with a 20% profit margin, we'll make $1,000 profit. We'll do this project and make $5,000 by ideally this date. And this date is purely just calculated as how many days we're going to take, and then it takes out weekends and holidays, so that even though the project due date with the client is the 31st, based on our day rate, we should get this done by the 17th of January. While this hypothetical project gives us more time to do the work, we shouldn't fill out that space. Instead, what we need to do is say, okay, if we want to make this project profitable, we shouldn't have to do any more work by January 17th. So that is our internal due date on this project, so that we can say, hey, I want to make $5,000 by this month. So what this sheet is basically saying is that I'm going to make $5,000. I want to make $4,000 in revenue, as in my day rate, and $1,000 in profit. I would come out at the end of it with $5,000. Now let's actually factor in and look at this value. None of these have changed because now we actually have to look at the work we've done. So if we're doing a $5,000 project, it's generally a good idea to do half up front, half at the end, show some skin in the game for both sides. So that means that the first invoice number 1, would be, we'll do one invoice and it'll be $2,500. And then we'll do invoice number 2 and it'll also be $2,500. Sweet. If something else happens with the project where we end up getting more money or less money, all this factors in. This is basically how much money we're making on the project. Now let's say hypothetically on our project we spend exactly 12 days on this project. So this is our actual time. We spend 12 days on the project, we deliver it, the client's happy, we factor in 12. And if I say 12, this is basically saying 12 times 350 is $4,200. So our actual net revenue, our profit at the end of it, we made an additional $800. Now, the reason why I've built it this way is because if we do the project in less time, as in we just do the project faster and the client is still happy and the quality is just the same, let's say 8 days, we get to make even more money. So what this is basically saying is we pulled in this much money, our actual revenue from this project, our project income was $5,000, and then we spent about $2,800 of our time on this project, and we had zero other expenses. We'd pull in an extra $2,200, and that means our profit margin is effectively higher. Now, unfortunately, not all projects are just time in, time out. Sometimes we have to buy some stuff. Maybe we had to buy some extra stock assets, and that cost us $200. So say 1 unit of stock assets at $200. Let's say we had to buy some extra art supplies 5 times, and they were each $20 each, sort of thing. We have other expenses. Let's say, hypothetically, the client was not providing us with any rental budget, so we had to rent some equipment for this project. So we would say our rental was, let's say, 1 unit at $50, 1 unit for computer. We didn't need any insurance, but let's say this was a video project where we're actually going out to film, and we have to travel for a day, so maybe we have to buy some gas. We get a full tank of gas because it was a far away gig. That would be one of $75.20. And we could also factor in some additional fees if we needed to. But what I'm trying to say is not every project is going to be completely cost-free just for your time. Sometimes you have to spend money to make money. So that means at the end of it, we would have this much money left. And if we deliver the project by this date, we could live off of this much money. Now, I'm getting a little speculative with some of these equations, but I felt it was interesting information to include. So based on this money that we pull in from our business, this means that we could live on our freelancer burn rate for about 9 days before we need to do more work. And on top of that, if we didn't get another project till the 13th of February, we would be perfectly fine. Now, the last thing I want to show you is, let's say hypothetically you weren't going to be on the project for the entire time. You had to hire something out, and we're not going to include any like extra studio fees or like producer rates or anything like that. We're just going to say, I didn't work on this project for 12 days. I'm going to work on it for 6 days, which means this is half of our target days on our target day rate, which means we would have a budget, an outsourcing budget of $2,100, because we're not working on this project for 6 days, which means we are outsourcing 6 days of work. We would have to find someone to do 6 days of work for $2,100 based on this client's budget. Now, let's say hypothetically you did hire another artist. They did do some of the work, and you say hired some artist to do some editing. And then we say days, and then we say we had them do 5 days, and their day rate was $250, which means we spent another $1,250 on someone else helping us do the work. that means we would pull in at the end of the project around $474.80. It's not ideal, but all things considered, at the end of the day, clients don't like surprises when it comes to budgeting. So it is your job as the artist and the freelancer to make your projects profitable. And sometimes I believe the most important thing you can do is not increase the revenue, but decrease your costs. This spreadsheet is certainly not perfect because we're not factoring in a lot of things when it comes to budgeting out a project. But not every project is a giant film or a super big commercial. Maybe you're just making something for some friends and they just need some help on a project where you're chiming in a little bit of extra labor. Or on top of that, let's say you're doing work for the Renaissance Fair, or you're doing a wedding video, or photography stuff, or family photos sort of thing. What I'm trying to say is that this spreadsheet that I built is supposed to be like the smaller project entry-level P&L that hopefully gets you to understand how your time, your day rate, and your expenses all relate to each other to how much money you can actually make as a freelancer. I hope this video was helpful. If it was, let me know in the comments section down below. Questions, comments, concerns, comment section is down there for that as well. I will leave you with the final tip, and that is to eat 1 gram of protein per pound of body weight, and you'll make some. Goodbye, my friends. Bye.